Hello and good morning. I welcome you to the morning meeting today on Monday, the 29th of January 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers. Yeah, so we want to have a look at the market opening and how things are going, especially in the DAX and but also in the FX markets. What I can tell you so far is that there has been some selling pressure in the DAX, which currently comes to an end, abrupt end, if you or if I want to be honest. And yeah, the DAX pushing back above 13,300 points. Let's just see how things develop in the upcoming minutes. So during the German version of the morning meeting, I mentioned that it wouldn't be such a big surprise to see this here only be a short push on the downside with no real significance based on, yeah, probably some oversupply, whatever, in a thin market environment. And now the market is probably about to make back most of these losses again. We didn't make it through 13,270 points on the downside, with next target then around 13,225. But instead the market can stabilize here, push back now, even though that does not necessarily mean that we are about to start a big rally now, because everything below 450 points here, this region, I consider at least to be yeah, so not really super bullish, let's say. So all in all, the DAX has some further potential on the downside, with a clear focus around 13,130, 150 here, as long as we trade below 450. And we have to see how things develop in the upcoming days. So far, I have to say, with the Fed around the corner on Wednesday, then the non-farm payrolls on Friday, and the market in the US here, US equity market being a little extended on the upside, I'm not that sure whether there's so much more potential in the upcoming days, at least here on the upside, or if it's probably more likely that we get to see some kind of yeah, unspectacular, if volatile moves into the monthly close. 1 second, please. So the thing is that it's real difficult. So in fact, during the German version of the morning meeting here, I said that I really don't want to formulate any trading setups, since I have really difficulties right now to spot an advantage in the market, even though I have to say, and that's something I can show you here, that's something I tweeted in the morning. It's also something I mentioned in my technical piece for the DAX for today. So you can see it here that I said, it's in German, but nevertheless, intraday tendency is short. So I'm not that wrong with this idea. So the tweet was when we still traded here at 340 around. Nevertheless, the thing is that it's very, very difficult right now to spot an advantage here. Intraday, I have to say yes. Let's see. I mean, the fact is that we are trading below the 50 exponential moving average here, and that's clear tendency in direction of the short side, even though it has been several times that the market, after such a push lower here, then makes it back above this 50 moving average here. Let's just see. So I think mainly we are definitely dependent on how things develop in the euro. And here, with the Fed in mind, I have to say that after the push lower, it's difficult to see the DAX really make back all of these losses in the upcoming minutes, respectively hours here, since the US dollar is really, really weak. So if we now with a weekend in between, look at the comments from Steven Mnuchin here last week in Davos, we have to say that it's not very likely that the US dollar can really become really strong in the upcoming months here, to be honest. So especially when looking here at this clear technical picture, but that's something, I mean, that's a downward trend here, which could clearly be broken rather sooner or later if the market just finds enough demand here. The thing I see very difficult here is the fact if you combine this picture in the dollar with the comments from Steven Mnuchin, which obviously state that we are not yet done on the downside and there's further potential to be expected. But, and I think this is even more important, if you have a look here at the Fed on Wednesday, at the Fed Watch tool, you can see that the market right now is expecting the Fed to hold rates steady at the current level, 125 to 150 basis points, with 95% probability. So the chances that the Fed will move is considered to be really low, and I have to agree here since it's not a live event. But, and this is interesting, if you now have a look here at the live events in March, you can see that the market's expecting a rate hike by over 75%. If you then switch to the next live event, which is in June, you can see that the market is expecting another rate hike. You can see this here. So we are right now here. This is the first step, 150 to 175, the step which is likely to be considered to come in March. And then you look here, 175 to 200, probability of over 50% plus everything above that, which pushes us to somewhere around 55%. And even in September, you can see that the market here sees another rate hike right here, with more than 40% chance. And if you look at these numbers, you can clearly see that the Fed is expected to be really restrictive and very restrictive compared to all the other, especially G10 currencies in the G10 currency universe. And with this in mind, and seeing the US dollar having a clear advantage in terms of yield and nevertheless still be considered strong when you carefully listen to the comments from Steven Mnuchin here, but also if you look at the developments from last year, January onwards, we have to state that this development here in the US dollar is something which is not very positive for the upcoming months, and definitely something to worry about for the ECB also, and here for the Euro USD, and which makes it unlikely that the Euro USD will see a very significant pullback. Probably we'll get to see a pullback in the upcoming days thanks to several data being published, ADP data set on Wednesday, then we have, as already said, the non-farm payrolls on Friday. We have some data around the ISM manufacturing on Thursday. So there are several reasons, if the data comes out better than expected, to probably see a corrective move at least in the Euro USD. But I have to be honest, I somehow can't imagine right now the Euro push significantly below 121 here, even if the data comes out better than expected. It's really unlikely, and that doesn't look very promising for the US dollar bulls currently. And that's also one reason why, for example, I consider US dollar, Japanese yen, for example here, to have some further potential on the downside. So on last Friday, Haruhiko Kuroda came out with several comments which pushed the Japanese yen lower. So Kuroda himself, in fact, didn't say anything super hawkish. In fact, he said something which clearly would have been yen bearish, but currently the market is heavily short the Japanese yen. So Kuroda says BOJ will continue to support Japanese economy with monetary easing. No big surprise, we knew that before. Nevertheless, it shows that the Japanese central bank is willing to push further here, and this is something which is right now not enough when you look at the current market sentiment. So Commitment Affairs report still shows market participants being aggressively short the Japanese yen here, and so probably also with the potential risk off around the corner right now, nothing looks as if there will be kind of a risk off move. Look at the Dow Jones. I mean, there have been plenty of times here when we said, well, we are so extended on the upside. Look here. Nevertheless, the thing is that currently it seems as if the market is really not prepared for any pullbacks. So the current rise in the volatility index in the VIX has to do with the fact that the market is aggressively buying insurance in terms of volatility. Yeah, that's right, but it's insurance on the upside. It's not on the downside. So we're talking about heavy activity here in Dow Jones calls, and which leaves the market vulnerable, especially if we then rather sooner or later see a pullback here on the downside. And that's something to worry about, but not necessarily right now, not necessarily right before the Fed on Wednesday. And nevertheless, something to worry about, especially when looking at the current developments in currencies like the Japanese yen, but also the Swiss franc, which are usually used to finance carry trades here, and which should see quite aggressive capital inflows based on currency trades or carry trades here being reduced. Something very interesting happened already in the Euro Swiss franc last week. So usually I do not work with those trend lines, even though the break here nevertheless looks quite astounding, quite dynamic. And I have to say that probably it's the first sign that Euro Swiss franc also has some potential on the downside, which means, for example, that dollar Swiss franc, for example, if you expect Euro USD to stabilize at the elevated level, that USD Swiss franc is not yet done on the downside. So I had a question last week in the morning meeting, German version of the morning meeting, and someone asked me whether it's probably a good idea to go long dollar Swiss franc here. And I said, I can completely understand your thinking here. And I myself have to say, I consider this break, currently at least, not to be sustainable, not yet, in fact, even though I'd be really careful in terms of long engagements in dollar Swiss franc, because I somehow expect probably the Swiss franc to keep on strengthening here in the upcoming weeks. And that's one other reason why I still wait for my spot here in the seasonal pattern in CAD franc, respectively CAD Japanese yen. So I'm not positioned long here, even though I have them both on my agenda. And I could imagine a long position here rather sooner or later, even though right now I'm still stepping back here, and I don't consider long engagements to be so attractive, in fact. And let's have a final look here at gold. Also very interesting to see that the market wasn't capable of making it significantly above the highs from 2017, even though with a weak US dollar to be expected. I have to say that I consider the rally in gold not yet be done on the upside, even though I'd prefer another test of the region around 1,340 USD here, 345, and consider long engagements against this region to be quite interesting. And if we can make it from here to the highs from last week and above 1,366, I think the next target can be found around 1,400 USD. And yeah, so that's it from my end. Happy trading. Watch your stops, and talk to you again then tomorrow, 10:30 a.m. GMT, with the morning meeting here in the YouTube channel from JFD Brokers. I definitely look forward to it, and wish you all the best. Happy trading. Take care. See you tomorrow. Have a good day, and bye-bye.